Usually makes a little announcement, but welcome back everybody to our next episode on the Cannabis Accounting Podcast. Today I have with me Lee Generous, our franchise owner out of Boston, and just a friend of mine, good guy. He came into the space from the kind of the wealth management, financial advising side, but I'll hand it over to you, Lee, to just introduce yourself a bit more. You had a lot of acronyms and behind your name, so just tell me what your background is.
Absolutely. Thanks, Ray. Yeah, so let's see, my story, where to start? I spent 10 years of my career at Fidelity Investments. Period of that time, I built some of the operational infrastructure for their family office practice at Fidelity. So I used to work with the Johnson family that owned Fidelity, a lot of the Forbes top 100 clients with a minimum of 100 million in assets to clients with tens of billions of assets. During that period, I kind of realized that in the family office space, everyone has like they have a team of like dedicated professionals. Just like if Mark Zuckerberg wants to go buy Instagram, he goes and asks his team, like, hey, what's it worth? How much can I pay? He's got a dedicated tax person, dedicated investment person, dedicated risk person, dedicated team in every, specialty that he would need. And that was kind of what planted the seed for me that someday I wanted to start my own firm and kind of replicate that model. So, fast forward, now we're 10 years later almost after Fidelity, worked for a private firm. My wife got diagnosed with cancer. She beat it. It's like now late 2019, 2020 comes and we're all locked in the house and COVID hits us. I'm a type 1 diabetic. So, that whole don't leave your house, you're going to die thing, hit pretty close to home to me. But after, halfway through the pandemic, I kind of just said to myself, like, F this, I'm never going to work for someone again. I got all these designations. I got these resources. I broke off and started my own wealth management firm. In the midst of that process, I had like a client and a friend who was a multi-time business owner. And he was starting his fifth company. He's starting a cannabis beverage company. So myself and some of the other accredited and qualified clients invested in his company. And then we decided, start looking under the hood a little bit of some of the other companies in the space. And that's when I realized the financial hygiene, some of the companies that we support today were not always up to snuff. I came across Andrew, the founder of Dope CFO, and some of the other staff. First, we talked about collaborating. I'm also an enrolled agent, as well as a certified financial planner, chartered financial consultant, and a licensed investment advisor. And I decided to join the new Dope CFO certified advisor franchise as one of the, I must have been first two or
One of
three
the first ones.
franchises. Yeah, I was
You've
one
been
of the
up great.
first, one of the OG franchise owners. So I came into the space, kind of built out a team. My wealth management firm now has two CPAs who are advisors, as well as myself, who's an EA, kind of trying to replicate that family office model. And then after several years of working with clients as a Dope CFO certified advisors, I got talking with Andrew and you and the team, and I just always felt like it was bleeding into wealth management all the time. So, Andrew and I got to talking and we decided we'd launch Dope CFO Wealth Management as an extension of the certified advisor and the Dope CFO enterprise so that we could offer fiduciary wealth management to the cannabis, CBD, and hemp space. So here we are today. We got approved by the securities division late in September of this year. Just got our website launched and we're ready to kick off.
And I appreciate you kind of giving us the background because wealth management it's an interesting topic to me because I feel like I want to be wealthy. I'm pretty sure most people would like to be wealthy. We all want options. Wealth means different things to different people, but we all want to have options. And so I always just found it fascinating that there's a whole industry just about managing the wealth of others. No, that was just like my simple way of thinking about it. And for sure, like, yeah, the Dope CFO Wealth Management, like, because it came onto my radar too from like talking to other founders that like they're first or second time business owners, young business owners, and like trying to make money off their money, trying to manage their wealth that, whatever amount that they had. And it was, they're in cannabis, so they're already kind of like unique when they go to a traditional wealth management firm. And so it's like nice to have somebody that kind of understands the industry. But I guess just from like a cannabis founder or cannabis investor perspective, like how do they kind of think through wealth management services? Like, how would they interact with you? Can you just kind of walk me through that, like, initial
Yeah,
journey?
absolutely. And I'd also like kind of say, like, my time in the space, one of the first clients that I took on with Dope CFO certified advisors was a $30 million build out. And the founder had a big liquidation event, sold his company for billions in the billions. I've met other entrepreneurs in the space who were prior entrepreneurs, so they've already made their wealth. And now
Yeah.
they're entering this new space that has a lot more compliance and loopholes and all sorts of things that we need to take into account. But they all of a sudden they're trapped in this world of 280E and federal legalization, and they couldn't do the things they could do before. So there's a lot of unique criteria in wealth management specific to cannabis, CBD, and the hemp space. As far as how we would work with clients, so for us, it's similar to in the tax space where, for me as a fiduciary, and I would say, this is common when we do our onboarding as a Dope CFO certified advisor, but instead of thinking about the business, we're now thinking about the individual first, where we're going to do a lot of data gathering in the beginning. Our process, maybe after we finish the podcast, we'll attach a list of our services and kind of our process. But we generally do like a 3 meeting comprehensive data gathering process. We have a brief phone call to kind of get to know you. Do you fit? Are you interested in our services? And then we spend 60 to 90 minutes, whether by Zoom or in person, just reconciling all of your data. What do you have? Why do you own it? How is it titled? What's the entity structure of your business? How much income do you need? What are your expenses? Do you have estate documents? Do you have insurance? We go soup to nuts. After that, our team will put together within 5 business days, kind of like a comprehensive analysis, like a snapshot of where they stand today, along with like a proposal of how we work together. Generally, during the first meeting, whether I do this with cannabis CBD clients or I do it with somebody in the tech space or any vertical that I've worked with, usually it's just bleeding out of their ears. You can almost see them like, Jesus, because you cover a lot of subject matter. But after that, once we kind of define an engagement, we kind of sit down and prioritize and just start having subject specific meetings, whether it's an investment specific meeting, a business planning specific meeting, an insurance specific meeting, estate planning. It really runs the gamut. So we're trying to build out, between, especially the Dope CFO network, between our certified advisors and our wealth management team, we can start to emulate that family office model where we can provide almost every level of service except for legal. So we can do investment, tax, right? So we can really run the gamut of professional services for business owners and executives or whoever in the space is looking for wealth management to achieve their goals.
And so then, like, because it is interesting, right? Because I get what you're saying, where uh, the cannabis industry is capital intensive. The capital has to come from somewhere, and it's just being that it is still federally illegal. We just couldn't go to institutional, like super normal sources of capital to get a nice
Right.
little business loan, and so it lent itself to family offices, angel investors, kind of like those high net worth people. Private equity, things along those lines. Now, to your point, they've generated their wealth usually outside of cannabis, and now this is a new opportunity. And because they're looking for opportunities, this one kind of came by. So I think that does make a lot of sense. And then, what are some things that I guess just come to mind right away of like this? Well, this is what I could do when I invested in non-cannabis or traditional businesses, and now that I have my, investment or a little bit of wealth tied up in this cannabis company, like how do I get it back in the most tax advantageous way? Like what are simple differences?
Well, I'm going to even like pivot a little bit from that question. Like what I've come to realize, even before I became a Dope
Yeah,
CFO
make it honest.
certified
Like what I want to get
advisor.
into the mind
Yeah.
of Lee.
And I've said this to you, and I think I've said this to like our whole network of Dope CFO. It's like if you're a business owner or you're an investor into a business, if the person running the business or the person that owns the business doesn't have their own financial affairs in order, the business will suffer, right? Like, hey, I'm spending too much money. And, nobody ever says that to themselves, but like, I need more capital. I need more money to survive. It's going to impact the business. All of a sudden, the distributions they're drawing from the business are more cash flow than the business can handle to survive. So we always look at it. And, I think when we kind of started this
Yeah.
discussion about the podcast, we started talking about the accelerated valuation methodology, which is part of like the certified exit planning designation, which something I'm working on, and it's big and it's important in the exit space. But like part of that is there's kind of like three stools, if you think of it in terms of like exit planning and business ownership. Like you have to align your personal goals, your financial and planning goals, and you also need to have your wealth profile, your value, your goals, your current EBITDA, your market multiples. These are all gaps: your wealth gap, your profit gap, and your value gap that you kind of have in order. So like we want to align business goals, personal goals, and then the financial planning goals for yourself, right? Because I've seen people sell a business and then they're miserable a year later.
Yeah.
Like, oh yeah, I'm 45, I'm 50, I made $10 million. I'm gonna golf for the rest of my life. Yeah, you're gonna golf for 40 years? Like, hey, listen, I like to
Suck the fun right out of it, man. I went on
right.
a all inclusive for 6 days one time, and I'm like, dude, about the fourth day, I can't just sit here and eat and drink at the beach for six much longer. So like, I lived through the whole like, I'm gonna sit Muay Thais on the beach. I'm like, dude, I lasted 4 days. I gotta get
Right. Before I had to like yeah, before I had to like reassess my life and where I was at. Right, you know what? I didn't realize I wasn't plugged in. I'm just gonna grab my plug real quick. I'll be right back. All right, there it is. Yeah, so keep going.
like your personal orders going. We try that all the medium-sized businesses in cannabis were private, for the vast majority of companies, they're privately held. And so it's like, you can't just go back to the public markets for more capital. It's like, no, this is all pretty intertwined. Even if it is a C corp, it's still pretty intertwined. The personal, financial planning as well as the business financial planning, and most of them just they're straight flow throughs. So it is interesting. So
Right. Yeah, and I would say like to your point, like with trying to get access from public markets, a traditional company might, do a series A, series B, series C, get all the way, and then initially tried to get to an IPO, where that path isn't the same for these companies that are, impacted by 280E. They can't IPO and go to the public markets to raise cash. I say that with a caveat that it has happened on different exchanges outside of the US, but it presents its own challenges, as we've seen. A lot of investors and business owners aren't clear on the impact of 280E and how it impacts their business. But I mean, I think that's where our DCCAs, like our certified advisors, can step in. But then once the business is in order, does the C-suite executive, does the CEO, this chief operating officer, like I've worked with a number of executives now in the space on their own personal financial affairs. And we realize like, hey, I haven't done my taxes in 3 years. I don't know how much I need to retire. So when we do an analysis for somebody, it might present like, hey, you want to live on the same amount of money you're spending today. Let's just make up a number. You want to live on 250 grand a year. How much do you need to live on that amount of money? And how long will it last? Right? Like, how old were your parents? Oh, your parents are both 95. You got $5 million. You're 55 and you want to live on 250 grand a year. Hey, guess what?
yeah,
Yeah, guess what? It might not last that long. And like our job as fiduciaries, because we're a fiduciary planning firm, is to make people aware of that 10, 15 years in the future, right? Like, hey, we're going to do an analysis, and our software that we use for the financial planning is very powerful. I've shared it with some of the team now and gone through the analysis where we can say like, hey, if you keep on this path, here's how it's going to look. You're 50 now. Here's how it's going to look when you're 68. Here's how it's going to look in a bull market. Here's how it's going to look in a bear market. Here's how it's going to look in the base case that we think it's going to happen. Are you comfortable with that outcome? If not, here are the levers that we can pull to make those changes.
right. Because it's like to improve something, you got to track something, and it's like forecasting is like everybody gets like oh, it's not 100%. It's like, yeah, but it's still fairly close and accurate. And like, you got to put some thought into this, which clearly you have. Like, kind of just personal question because it is like interesting, like helping people with wealth management, wealth planning. Because it's like I'm so focused on making it. I'm like, I just want to get wealth so that I can worry about managing it.
Right.
But I guess like, what made you interested in wealth planning? Like no kid is just wakes up. They're like, I want to help rich people make money off their money.
I always tell this story. It's kind of funny. Number one, I have a very unique last name. People are always like, "You were made for this," right? Um, but like, even I guess this was just my path in life. Even when I was a kid, I had a paper route. I saved like $1,500 and I bought the Janus Worldwide Fund. I was like 11 years old. It was my first mutual fund. So I was investing at like a very young age. My father worked. My father was actually like a cook. My mom worked at a newspaper, hence my paper route. But I was always like saving and looking to acquire more, and always had an interest in finance. I'm also a type 1 diabetic, so like I was always checking my blood sugar and then figured out how much insulin to give, how much food. So I was analyzing numbers as soon as I was old enough to take the needle away from my parents, like nobody else is sticking me. I'm going to give my own shots. So I joke today with my clients and like with other people in my family. I'm the only one in the family that's pretty solid at math, but it's probably because I've been analyzing numbers my entire life because of my diabetes. And then,
That is
I'm
interesting.
kind of a workaholic. I can't stop. If I didn't work, I'd probably have a 30,000 square foot house because I just keep putting additions on. Like I don't sit still. Well,
Yeah.
so I kind of fell into this. Some of my old, I was an athlete in high school and college, and then some of my coaches ended up getting a job at Fidelity Investments. That's kind of how I fell into that. Once I got into the world of investments and finance, that's just kind of where my career took off. You look back on it and gosh, if I had gotten into agriculture or something else, maybe I'd be in a different space today. But I somewhat fell into it. I even had a business in college. I was the DJ at UMass Amherst, and I DJ'd at like 5 bars and the frat houses and all sorts of stuff. So I've
What
always
was
had
your
an entre.
favorite? What was your favorite tracks? I have to ask. Like, were you a techno DJ, old
So
school
this
hip
is,
hop?
this is the very late '90s, early 2000s. This is the Usher, Little John. I'd be throwing
Yeah.
on some Billie Jean's "Not My Lover" at the end of the night. So I think in my day, it was kind of the entry of Eminem, 50 Cent, like that whole era was my prime time. And I couldn't
Oh,
even tell you a top 10 song today. So
he goes, it was a business. I was
right.
there to run a business.
I
Man,
almost didn't want to leave school, but then I was like, oh shit, I'm going to be 24 and there's a bunch of 24 years old. There's a bunch of 18-year-olds here.
oh man. No, because business is fascinating because like even I've had businesses since I was a boy and like for sure since I was 16 and like got my first vehicle. It's like I was hustling since before then, but it's like and it's not so much even just the making of money. I've learned it's like I have an interest in money. Like it's like I'm a CPA. I went to school for accounting,
Right.
finance, masters. It's just like I don't know. It is interesting stuff, and it is like a source of energy. But some people just like business, and I totally hear you of like, man, if you look back, like I'm just this way, and I could have pivoted to this way and been this way, or I could have gone that way. And sometimes it is like a guiding hand, or a coach, or a mentor. It's very interesting how life could have played out a few
It's
different
funny.
ways.
I don't know exactly what the term is. Craig, who is a CPA that I work with, like I've had a couple instances in this last year. Um, I'll give like this example. Like I just hired a new college grad, and he was a Division I athlete and played football at Boston College. And I haven't met anybody who plays football at Boston College in like 15 years. As soon as I hired him, he and I together in the first 3 weeks we were working, crossed paths with like sick. We went to a conference. We're listening to an economic speech for a big trust company, and they're like, "Oh, this is our team. We hired 2 people from the Boston College football team." Then we had a prospect meeting with a guy who runs a fertilizer company. It was a big long meeting, and at the end, he's like, "Oh yeah, my grandson's being recruited by Boston College football." And I'm like, "How does this keep happening?" And then recently, for some of our high net worth clients, we made an investment in a private company called Anduril Industries. That's a defense tech company, which I'm very excited about. See what happens with that. Sure enough, we had a prospect meeting like 2 weeks ago. I'm talking to the client. I was telling him about the investment in the company as an example of some of the things we do. And him and his wife start laughing. I'm like, what's so funny? He's like, I just took a job. I work at Endural Industries. And I'm like, this is weird. Why do these things keep happening? So I just joke that it's like the cookie crumbs that you're on the right path.
Yeah. Yeah. It's like they're never gonna just give you a big sign, but there'll be signals.
Yeah,
Um,
I don't know if it's the man upstairs or whoever it is, but like somebody's giving you hints that like, hey, if these little things keep happening, you're on the right path.
Nice, nice. And thinking about just like the path of, like ultimately wealth management is about helping our clients. Clients are, business owners. And so I guess just obviously there's like the tactics and this is how it works. I guess like what makes the relationship work? Because it's like it is such an intimate topic, like even just accounting, like for the revenues and expenses of a business, as I learned very quickly, it's an intimate topic. And
Right.
that's why it's discussed with the accounting team and the owners and not the operations team. But like wealth is even a more intimate topic because it's like it's the money after taxes. It's like the money we pulled out of the business. So I guess just like what makes a relationship work? Like how do you find like the right fit between wealth management, wealth advisor, and client?
Yeah, so that's a good question. Like what it's been nearly 20 years now, which
Right, you're probably immune to it, but like I'm
makes me
still
feel
like it's
makes me
an
feel
intimate
old.
thing.
Makes me feel old, but I kind of feel like I'm at the like we're all at the perfect spot now. Or I got 20 years experience, but I got 20 or 30 years in front of me. Hopefully, I'm
Yeah,
continuing to
you're the
do this.
prime.
But like what I find, especially how we run our wealth management, like we're fee only fiduciaries, right? So everything we do, we're obligated, like we sign a fiduciary engagement letter with the client to do what's in their best interest. And it starts out with like, gathering the data, creating recommendations. And then we kind of require at least one meeting per year. On average, we meet with people 4 to 6 times a year. Sometimes in the beginning, we meet a dozen times. But during those engagements, right, you're talking about goals. What do you want to accomplish? What is the purpose of this asset? What is the purpose of this business? If you sell it, how much do you need? So it becomes very personal because you're talking about personal goals and you build relationships with the clients. Like I've said to a lot of the new employees and some of the new people in the firm and just over the years, it's a relationship based business, right? You're talking to somebody who built a business and they sell it. There might be a degree of like satisfaction and happiness, but there also might be a degree of like
Sadness.
sadness, right? Like it's gone. What do I do now? Or like
Where'd I get my
you
meaning of
share, like
myself
I've
to?
shared in people's like spouses dying, their children dying, their parents dying, and we help them get through that process, whether it's, going through probate, the estate, dealing with taxes. So you're kind of when I meet new clients, so the analogy I give a lot of time is like, hey, it's your boat, right? You're just hiring me to drive it. I can get you there in one day through stormy waters, and it's going to be a rough trip,
Yeah,
or I can take you in the scenic route over 5 days, but it's still your boat. Or like if you're a sports person, I'm in Boston. Patriots won last night. Maybe I'm the
get
quarterback,
over yourself. Got the
right?
Celtics too. It's like you have enough.
Oh, Celtics is a whole nother story. I can't go there right now, but
There's a
you
sports
know,
analogy, yeah.
we're like the quarterback. So like when we work with a client, say we meet with an estate attorney or a business attorney, and they're saying like, all right, we're going to get this done for you. We're going to have it done, and we're like, all right, what's the deadline? When are you going to have it done? We'll have it done in 8 weeks. Well, like our team's probably going to be reaching out to them in 6 weeks. You're like, hey, how's it going? Where's it at? You have a CPA who works on your taxes. We as a firm, since we have a lot of tax professionals, will do tax work, but we also partner with firms on the tax work. So we're gathering all the data, reconciling all the tax work, giving it to the preparer, and then partnering with them. Like if I'm going to give you tax advice all year, I want to make sure it gets implemented with the return. So like in our model, like when we charge a fee based on the level of the fee, we'll actually reimburse for the tax return. Look, we're happy to pay for it as long as we are involved with the process, right? I have an estate planning meeting next week. I will be in the meeting with the attorney and the client, right? So we're kind of hand holding the whole process, whether it's the exit plan for the business, that you got married, you got divorced, you had a baby, somebody died. Like these are all life events that will involve your financial world and also
Hmm.
your goals. Like we are goal based.
Yeah, because you need to have financial goals, or else it's like, well, it's like a
What's the
ship without
point?
a Yeah, it's like, what are you trying to do then? Everybody wants more money, but like
And
pick a number
beyond,
because
right, I would even say like beyond financial goals, like, hey, what do you want to accomplish? Like, hey, listen, man, I want to be living on the beach and retired and not have any debt. Like, okay, well, you tell me that, and you're sitting here today, and I see a mortgage with this amount. You're making this much money. So like the outcome of this path is not the outcome that you just told me you want to accomplish. So it's really defining, like doing the legwork and the analysis to understand what they're trying to accomplish and what needs to happen to create the path for that accomplishment.
okay, that is kind of interesting to think about wealth management. It's not so much of like, this is my pie in the sky number. How do I get there by the time I retire? It's more like you kind of like you just said, like, well, how do you want to retire? Like, you could keep the business and take a board seat and install somebody. You'll get paid less per year, but you'll have money for the rest of your life. Or do
Right.
you want to just sell this thing outright and just kind of retire and coach your kids' sports teams, like, and be zero involved and do that? But it's like they're different lifestyles, and it's like I'm obviously like trying to develop real estate here in Mexico. And it's like, well, that's because like I have a lifestyle. Like my goals in life are not to be in one country, but to have like wealth in two different countries, kind of have a dual citizenship going where it's like I just like traveling and I like finding I find culture interesting. So like my dad though, he's a northeastern Wisconsin man from the 90s. He wants to retire on a lake house in Wisconsin and just live in Wisconsin forever. So it's like his wealth planning is going to be way different than mine because I got to figure out ways to get wealth down to Mexico. Different
Right,
goals.
which there's a lot of intricacies on that, and it's like I always tell people like, listen, I wake up think I love what I do. My wife said to me recently, like, I
I
never
can
hear you
tell.
complain about work. I'm like, if you love what you do, you never work a day in your life. But like the majority of our population hustles all day, all week. How much time do you have to become an expert in something else? Right, like.
Yeah.
I
Yeah.
my wife handles all the healthcare stuff. When it comes to the numbers, I try to educate her so that she knows what she's doing to a degree. But like, this is what I do. This is my passion. So you're leveraging us to be like your outsourced quarterback, boat captain, chief financial officer, whatever you want to call us. But at this phase, especially with the combination of the organization, we can do almost everything for a business owner outside of writing legal documents. And even though we can't write them, we will collaborate and work with that attorney or that CPA or whoever your CFO, your CMO, your operations team to make sure that when we're defining your goals, that they're getting implemented and the people that are involved, are kind of doing their part.
That is interesting. And I like the aspect of like you almost can't not be relationship based because like the things that impact your finances, like they're usually like big life events, or it's like you care for so much of your family that like your finances is like an extension of caring for your family. So it's like you're like helping these business owners and people care for their families,
Yeah,
all that.
100%. I just had a call with, I have a client who owns a barber shop and there's multiple shops. They have
Nice.
28 barbers in total. And he's getting married, he's having a kid, and he's like, "Hey, do I need life insurance?" I'm like, "Whoa, let's step back here. Do you have a power of attorney? Do you have a healthcare proxy? Do you have a will? You're about to have a kid. If you guys both pass away in a freak accident, who gets the kid?" He's like, "Oh, we haven't thought about that." I'm like, "Well, that's fine. You can get life insurance. That is important. But like, let's prioritize your goals and like what's most important. Like, hey, you're 40 years old. Yes, retirement's important, but what if you pass away tomorrow? Retirement ain't gonna matter."
Yeah, which does happen, especially for gentlemen. It's like you have 55 and have a heart attack. Which I guess that's a question I selfishly was thinking of preparing for this call. But yeah, like there's the movie Succession or the television series. I actually kind of like watching it. It's like the wealthy
I
billionaire,
haven't.
like media mogul, and he's trying to figure out one of his three idiot kids is like worth giving it to. But I've seen this just as an auditor, like even before the cannabis industry, because we were auditing like older companies, multi-generational companies, and it was always part of the conversation. And it was like interesting. Some people were like, yeah, I already did the will. This is how it happens. This is when I retire. We're executing the plan. And then some CEOs and founders were always just like, nah, I'm gonna run this till the wheels fall off. I'm still the best person to run this. And like the kids would be like in presidential positions and working their way up. So I guess like how does that conversation happen with like succession or generational wealth planning? I guess like and why is there kind of
Yeah,
this
so that's
friction?
funny, especially like because we specifically, and like the DCCA, we're in the Dope CFO Certified Advisor world. Like we're primarily working with business owners, and
Yeah,
you know,
exclusively.
sometimes business owners forget that like if they are the only one driving the value in the competency of the business, you know, they're actually decreasing the value of the business, right? Like if you sell the business and it blows up because you're not there, it's going to be worth less money. You know, there's like a finding that 80% of owners' wealth, like business owners' wealth, is in their business. So they're concentrated in that. And then 70 to 80% of the transitions fail. I think somewhere in the neighborhood of 60% have no third act plan whatsoever. So they're like, especially in the cannabis space, like exits generally happen at younger ages because it's a newer vertical, it's a newer business. So it's like you sell your company and you're 40, 50, even 60 years old. What are you going to do next? What do you like? What is your plan? How are you going to handle that? Do you know how much tax you're going to owe if you sell your business? How are you selling it? You know, family businesses, many time when the second generation takes over, there's somewhere in the neighborhood of like a 40% success rate. And when the third generation takes over, it's like 15%. So like everyone's like, oh, I'll have my kids take over. Like I've seen it many times. Like I worked with families, I'm not even going to repeat their name, that are on the fourth, fifth generations, and the wealth of the family is shrinking because that fourth, fifth, sixth generation just isn't as productive as the hustler who started the business in the first place.
No, that is interesting too. And it's almost like, right? Because like the goal of the caring parent is to like, they just want their children and their children's to be taken care of. And it's like, well, honestly, if that's your goal, again, what are your goals? You might want to just not give it to your kid and hire a management team to start running your business as you step away. And then the business will always be there to like support them. Because yeah, it's like, but then everybody's ego gets in the way and emotion, and they're like, "No, I raised the kid. He's gonna be smart enough to figure it out." It's like, no, dude, he didn't have the same struggles you did.
Right. Yeah, he might be able to. It happens,
It does happen
sometimes,
sometimes.
but it's people need to keep in mind that's, do you want to bring your 20-year-old in to take your business? Does he have the life experience that you do? Maybe not. Like the whole exit planning institute, I'm only leaning on that because I'm starting down the path of getting that designation. They kind of explain it like the framework as like a 5, 4, 3, 2, 1, with like the five being the 5 stages of value maturity. So like you identify, you protect, you build, you harvest, and then you manage. So that's the 5. The 4 is like the intangible capitals: human, leadership and talent, the social, cultural, communication, the customer. Do you have the strength and diversity of customers and the relationships of customers? And then the
Mhm.
structural. Do you have the systems, the processes, the IP? And then the three gaps, which are wealth, profit, value. And then the shortfall that might be between the owner's current goals and the actual EBITDA and market multiples of their business. Like, hey, I need $5 million to retire. The average company in my space has a 7 times multiple, but then you do a valuation and you only got a 2 times multiple. Like, what is wrong? What happened there? The two is like, kind of concurrent paths, things that should happen at the same time. The business improvements and your own personal financial like readiness. Like if you had to sell the business today, would you be okay? If you sold the business in 10 years, is it going to achieve your goals? And then the final, the one in the 5, 4, 3, 2, 1 is like to build a significant company that's valuable, transferable, and it's ready at any time. So the whole like exit planning, like designation and that world it's supposed to be like a 90-day repeatable process that you're just always doing. And wealth management is similar, where it never ends. I tell
Yeah.
people all the time, like the only thing I can guarantee you, it's all going to change. So whatever we create today, next year your life will change, the tax code will change, the markets will change. So it's just the process is to constantly be reconciling, revisiting, growing,
Mhm.
enhancing.
No, that makes a lot of sense. And like we were talking off camera, it's like depending on what industry you're in, it's like regulations can change. It's like obviously we're in a highly regulated space in cannabis, but even investments in outside other industries, it's like things do
Oh, yeah.
change sometimes. We're like, especially
Right. I'll
cannabis.
tell you, dealing with the securities division isn't always the easiest thing either.
Oh, no, very interesting. A quick question, kind of, and I want to get you out of here in like the next 15 minutes, but just the cannabis market is down, but there's other markets that are down. And so when a client of yours has a lot of their wealth tied up in their business in a market that is either, stagnant or down, kind of how do you start to help them either protect the value that they already have or even get into a position where they can slowly grow the value of their business, even if the overall market is down? I know that's going to be more into like the business side of it and not so much like the founder side of it, but I guess how do you even talk with the founders through that when they're going through kind of like a down market?
Well, regardless if it's a down or up market, like when we're
Yeah.
have that first initial meeting, like we should have defined from some aspect, like, hey, how are you gonna meet your fixed expenses? Just the things you need to survive, eat, keep the lights on, and then
Yep.
what's discretionary? What are you doing in that excess money with that excess money? So, like for us, when we're doing wealth management, people will come in, especially like the last 5 years, like, oh, I want to buy Nvidia, I want to buy this, I want to buy that. I want to invest in a business. And I'm like, well, there's kind of like a proven method here. Like, if you can first get an emergency fund that should be getting 3.5 to 4% right now, let's get that. And we're going to put 80% of your excess cash in that until you reach this goal of having the emergency fund. Once you have that, now that 80% is going to change to 5% of your excess cash is going to go into this core savings, and more is going to go into an investment account or a rainy day account, right? So it's all goal based. If you're in a business like cannabis, and we are in a down market right now, it's a legitimate concern. We all saw what's happening in that with the hemp legislation right now. Like some of those people like have no idea if they're going to have a business in 14 months from today. So like
Yeah.
they need to concurrently plan to keep that business alive to succeed, but be realistic as well. As if it doesn't, how will I survive that first year, that second year, that third year? What levers can I pull to collect income to feed myself and my family? How much income do I need? And what options are available to me? I always tell like every client, like my job is not to tell you what to do. It's to educate you on your options so that you can make an informed decision.
Right, right. And I feel like most people, founders, operators, like they want to make their own decisions. But to your point, it wants to be an informed decision, hopefully with somebody I can rely on and bounce ideas off of. Um, just thinking through the wealth management industry as a whole, it's similar to cannabis. It's probably changed over the years. So I guess just from when you started in wealth management to today, I guess what would you say has changed?
I think there's a lot that's changed. If you go back 30 years ago, and that was a little bit before my time, but as I was kind of like coming into the world,
Yeah, so
it
you're still
was
DJing 30 years ago.
yeah, exactly right. Well, not even. Let's see. I was probably still doing the paper at that point. I'm in my mid 40s now, but it was like more of a commission based world, right? Where like, if
Okay.
you're a broker and you make a trade, the broker gets a piece of that trade, or they sell you a product, there's a fee, and they're getting a commission on that. And slowly, it kind of transformed into like an asset based role, where like, hey, give me your money, I'm going to charge you a fee on your money. When you do better, we do better. When you do worse, we do worse. And that's kind of like an AUM, asset under management model. What I have found over time is, the flat, what we offer is both like the AUM model or just like a flat consulting fee. Like we, again, want to give everyone choice, right? So if you're a business owner and you're paying a consultant fee to a tax professional or another professional, you may be able to deduct that expense, where an asset-based fee may make you feel more cash flow rich because you're not like coming out of pocket to pay a fee. Like some of the clients this year, like instead of making 19%, they made 18.4% because we had a fee taken out of their account. They don't even notice the difference. They don't care. Like we obviously disclose and tell them, but it
Yeah,
feels
yeah,
more
yeah.
comfortable. But I think as the world moves forward, especially I think with the younger generations now, like a flat consulting fee or a business consulting fee makes more sense. And I think it makes you more like agnostic, right? So, hey, listen, I don't care if you're over at, in the cannabis space, if you're at Citizens, Safe Harbor, Credit Union One, like we need to find the solution that's best for you. Whereas, like, if you're an asset based advisor, and I have all your assets in, Charles Schwab, Morgan Stanley, Fidelity, wherever, Altruist, there's kind of a natural conflict of interest. Well, like, oh, I don't want you to take the money out, because then I don't get my fee, right? So
Yeah, yeah, I was gonna say it seems very contradictory.
and so like back in the day, it was like a transactional business. Like, hey, if I make this transaction to you, I get paid. And then it kind of transitioned to more of like, oh, I'm going to manage your material, and if I do the right things for you, you'll grow your wealth and you'll do better. I think, in my opinion, I'd like to see the industry start more move to like a flat fee or like a consulting based fee model. And we don't care if it comes out of the portfolio, comes out of the business, wherever you want to pay it. I have clients that pay on their credit card so they can get airline miles, totally up to them. But I think it really conveys that like fiduciary obligation, because then we're completely agnostic. We don't care whether you would, I don't want to say I don't care. I don't think that's really the right way to convey it, but like it doesn't
If
impact
it doesn't
us.
impact your decisions,
Exactly. And
yeah.
like I never felt like I was conflicted working in the AUM model, but I
Mhm.
just found like there's a natural like, hey, you got $2 million with me, but now you want to go buy a cannabis business. Well, if you're not paying me, how can I help you? Whereas like
Yeah,
if it was just like a flat fee, then I'm like, hey, let's do the analysis. How much you think you're going to make on this? What's the best case? What's the worst case? I think you could make more investing in the market, but if this is your passion, here's the path
Mhm.
forward. Here's how we could do it. We've had people looking for capital that have gone out in the cannabis space and, tried to get private loans or looking at venture capital firms. And meanwhile, they've got taxable investment assets that they could borrow on. And we can get, like today, we can borrow on taxable investments for 4 to 5%, and they can get a tax write off for it for short term capital losses. So, whenever we engage somebody and they're open with us and we're connecting with them, by telling us their goals, it's then our job to go search everywhere and be like, all right, here's your options. Here's what you can do. We can get capital here. We can get capital here. You can pull it out of your retirement account, but here's the tax liability. You can take a home equity line. You can get a private loan. And it would be our job to kind of present them with like, all right, here's the 4 different options. Here's the pros and cons. And then I feel better about the client, like when they make the decision, none of us can guarantee the outcome, but at least they have a better feel for what the outcome may be.
yep, yep. There's never risk never goes to zero.
Right.
But to your point, it's like we want to feel good. We want to have at least clarity about the decisions so we can be confident. It's like
Right. So yeah, you want to make informed decisions if you can.
yep, yep. Man, I can nerd out on this all day, and selfishly, I got a few more questions, but I think I'll just run them by you when I'm with you next time. I'm like, man, how do I start planning a little bit more? But so we know how wealth management has changed. We know we're serving the cannabis industry with Dope CFO Wealth Management because, like to your point, it's a unique industry where it's capital intensive. We can't go to normal sources, so there is much of the capital that's come from high net worth individuals, people that have wealth that needs to be managed. So I guess just thinking of the cannabis industry, and obviously there's a lot of changes, kind of like you said, there's the changes never stop. You just kind of roll with the punches, and that's kind of why it's a rolling 90-day process life. It's like you never really get to a coasting thing. As we both know, whether it's business, family, health, there's always something that needs to be planned and addressed for. But thinking through the cannabis industry, like what has you excited about the future? Just to try to end on a high note, because I feel like, yeah, we got to be concerned. It's a tough industry. It's still federally illegal, but like progress and things are happening, and like some people have made money in the cannabis industry, and so wealth planning is still definitely a thing. There is valuable companies here, so succession planning and exit planning should be a thing for the owners and founders. But from your perspective, Lee, up there in Boston, what has you excited about the future of the cannabis
Yeah,
industry
and
and
I
your
work with
network?
people across the country. Like we have an office in Colorado
Nice.
as well as Massachusetts. But like I said, I'd say from like the excitement standpoint, I do think each year that goes by, like we're getting closer and closer to, some kind of decision from the federal standpoint. And I'm excited that like institutional capital and like mainstream fiduciary advisors are starting to enter the space. The maturing professionals, operators embracing valuation, discipline. I say this kind of with like biting my tongue a little bit, given what's happened this week, but like some regulatory clarity on the horizon. And, it's starting to
Yeah.
enable more mergers, M&A, capital market access, more banks are entering the space, more instant. I know um, being in the space, I don't just work in the cannabis space. Like my legacy clients are traditional operators, and I work with big institutions as well. They have their eye on the space. They're kind of just going like this, like waiting for some clarity on
Yeah,
like federal law, and so that they can enter the space. There is a big pile of money that is going to hit the space
could be
eventually.
unlocked.
Right.
Mhm.
And that does have me excited. I kind of look at it, it's like, in my opinion, it's an inevitability. I
I
believe
would agree.
yeah, we're at 38 states legal. Like what, we're gonna have 50 legal states and it's gonna be federally illegal. I sit
Yeah,
on the NCIA Banking and Finance Committee. I was able to go to Washington, DC this year. I met with Senator Tom Fetterman, Senator Cotton, like a number of other people. That was an incredible experience. And even like just talking with our congressional leaders, like they acknowledge how far it has come in the last 10, 15 years. So I do think we're like matriculating the ball down the field. We're getting closer, even though it feels painful. But as we get closer, there's going to be consolidation, but there's also going to be efficiency and improvements in how people operate in the businesses.
man, I like your take on it. It was a very sobering take on the future of the cannabis industry. It's like, yeah, especially this week, there's always such doom and gloom, but it's like, nah, it's progress, and like progress isn't meant to be perfect, and progress is not meant to be painless. It's meant to be progress, and like
Right.
sometimes it hurts and it feels like work, but that's how shit gets done. And I agree with you too. It's like, because I talk with a lot of CPAs outside of the industry, and they're always asking me like, "Why did you do that? Like, what is this industry like?" And I always ask them too, like, "Well, is your industry any better?" They're like, "Ah, it's also kind of tough," but they have access to very traditional business things that we just don't have access to, and so it is
Right.
kind of interesting. But to your point, the early adopters of the cannabis industry are in here, and a lot of them, for better or for worse, have very high risk tolerances for different reasons. But there's like all these like people will come into it that are not here, and I agree. It's like, nah, it sounds like it feels like we took a step back this week, but bigger picture, more states are legalizing. We're getting closer to like on some type of federal reform, and so. Yeah, I don't have a crystal ball of what day it's going to happen, but we're definitely matriculating the ball down the field, to use your phrase.
Right, right. Well, and like Andrew, like the founder of Dope CFO, Andrew, like always says, like, and I've recognized this, that the total addressable market and like total sales, not only in the United States but across the globe, just continue to grow. So
Yeah.
it gets bigger and bigger, which tells me like eventually the snowball is going to get big enough where it's going to turn into an igloo, a house, a permanent residence. Like it's going to happen eventually. So, for a lot of people right now, especially the small business owners, it's just, making sure, this is why we created the wealth management firm partially, that you're in a position to keep yourself afloat, know what your goals are, know what your limits are on both ends, and make sure that you can continue to drive forward until that day comes that we can operate like a traditional American business.
For sure, for sure. Awesome, my man. Well, I'll let you get out of here, Lee. This was a pleasure. Like I said, I'll have the kind of the website, the white paper, your email, and everything in the call notes. But this was a pleasure, my man. Thanks so much for your
All
time.
right, of course. No, good to see you. We'll talk soon.
All righty, love you, brother.
All right,
Peace.
peace.